Hello beautiful blockchain people. Today let's have a look at the price chart of Bitcoin, and I want to mention that last week we analyzed Bitcoin approximately a week ago. So today let's have an updated, let's say, analysis of the price chart of Bitcoin. The current price is $41,249, and this is the monthly chart. We always start from the monthly time frame. We're very familiar with the price chart of Bitcoin in the major time frames. Let me remind you that after the second top, that is above the first one, there was a correction, and we analyzed these bearish candlesticks with descending maximums and descending minimums. The situation started improving in February when a small bullish candlestick formed with a maximum, yes, still below the previous one, but a minimum above the previous one. So that was a sign that the bull started supporting the price, and this support started within the range of the previous local low. Next, this is the candlestick for March, and this is the candlestick for April. First of all, these three candlesticks or even four candlesticks, they have a local highs or maximums at almost the same level. So this is a small positive signal. Once again, I want to highlight that this is a small positive signal because we don't have these descending maximums like we used to have during this price decline. Now the maximums are almost at the same level. To some extent, we have an additional positive signal that the minimums are ascending. So we don't have these descending minimums. Instead, we have this to some extent ascending or increasing or higher minimums. But we have to be really very cautious because the current candlestick for the month of April is at the moment a bearish candlestick. Of course, we have enough time till the end of the month. This candlestick may change, but I just want to underline that we have to constantly keep an eye on this candlestick because we have something similar to a bearish engulfing. The bearish body is covering the bullish one, and this is some small warning to the bulls that we have to keep an eye on this candlestick. However, I still want to highlight that the current local low or the current low is above the previous one, so it's a tricky potential bearish engulfing. That's why it is not a perfect bearish engulfing. It may also disappear, but I want to highlight that we have to keep an eye on this candlestick. So this is according to the monthly chart. We have consolidation here. It is a potential bottom, but the current candlestick is worth keeping an eye on. Of course, if we see a further decline, for example, and the body of this bearish candlestick continues to drop, then this will be a more bearish, let's say, warning, and we have to be really very cautious. Okay, now let's switch to the weekly chart. This is the weekly chart. Although in the monthly chart we have some warning, the weekly chart still doesn't confirm this bearish signal because if we switch to a linear chart, there is a potential ascending channel, a sequence of higher lows and higher highs. That's why this positive scenario still remains in place. Yes, it may change. Of course, if the price drops below the lower line, then it will invalidate this potential bullish scenario, but at the moment we're still within this ascending channel, so I don't want to say that we have a bearish really sentiment in the market. Okay, let's get back to the candlestick chart. Okay, this is the candlestick chart. First of all, when the price hit the upper bound during this rebound, when the price hit the upper bound of this ascending potential ascending channel, it formed a dodge. After that, two bearish candlesticks. Now we have a bullish candlestick, but we have to be really very cautious because this bullish candlestick is still not very bullish for us because it has a maximum, let's say, at the level of the previous one, and it has a minimum below the previous one. So we don't have this ascending minimums and ascending maximums. That's why, of course, today is Wednesday. This candlestick may change, but we have to be really very cautious here. I will become more bullish if I see the body of this candlestick growing and if the body of this candlestick is able to cover the body of the bearish candlestick, then we will receive a bullish engulfing. We will have a maximum above the previous one, and in this way it will bring some positivity to the market, because once again still we have these descending maximums and descending minimums since this dodge within the potential ascending channel. That's why we have to be really very cautious here and to keep around this candlestick as well. Now let's have a look at the daily chart. Okay, this is the daily chart. We have three moving averages. Let's start step by step. The first one is the 30-day moving average, or for the period of 1 month. The price is at the moment below this moving average, but this moving average is heading sideways, so at least we don't have this decline here. And I want to say that since in the second half of November, in December, in January, and in December, in January, and during the first days of February, the price was below this moving average. Since then, the price has been fluctuating, sometimes above the moving average, sometimes below the moving average. Yes, when we're below this moving average, or below the moving average for 30 days or 1 month, we have to be really very cautious. But at the moment it seems that we have some consolidation, and at least we don't have this declining or falling moving average. Next, let's add the 3-month moving average, or 90-day or 1 quarter moving average. This is the 3-month moving average. The price dropped below this moving average during the first days of December. Since then, the price has been mainly below this moving average, but during the second half of March, the price during this rebound surpassed the 1 quarter moving average and has been mainly above this moving average since then. Of course, now we're like consolidating at this moving average, but this is some positive signal. Moreover, I want to highlight that here we had a bearish moving average crossover. The 30-day moving average dropped below the 90-day moving average. But here we have the opposite, or the bullish moving average crossover. The 30-day moving average here surpassed the 90-day moving average, and since then the 30-day moving average has been above the 90-day moving average. So this is another signal confirming this potential stabilization of the price or consolidation. And I want to say that I talked about it last week when I analyzed the price chart of Bitcoin as well. And now let me remind you that we have to be still really very cautious, because if we add the 1-year moving average, the price is still below the 1-year moving average. And I want to remind you that when the bear market ended and the bullish market started, mainly the price was always above the green moving average, or above the 1-year moving average. However, during the first days of January, the price dropped below the 1-year moving average. It has been since then below the 1-year moving average. During this rebound, the price tested the 1-year moving average but was not able to surpass it. Instead, the bulls faced resistance at the 1-year moving average, and since then the price has been declining, and we have to be really very cautious. But let's hope that some kind of consolidation continues. And for example, if these 3 moving averages continue to move sideways, then they will just confirm the consolidation, and it is much better than having these declining moving averages like during this price decline. And if we have a look at the 4-hour chart, let me remind you, we had this uptrend here, then the price exited, unfortunately, in the downward direction, the uptrend, and it formed a descending channel, or a descending narrowing wedge. So that was a downtrend. However, we were able to spot right on time the breakout and the price, and when the price exited this descending channel or downtrend. Since then, the price has been fluctuating upwards, probably, because if we switch to a linear chart, we have this ascending minimums and ascending maximums, so higher lows and higher highs. Of course, let's hope that this is a local low, and let's hope that the price of Bitcoin rebounds from this, let's say, lower line. And if we have something like this will confirm this potential ascending channel, and this will be an additional bullish signal that this is a local bottom, and probably in the heavier time frames we will see sooner or later uptrend renewal. However, if the price drops below this line and drops below this local lows, then we will receive a bearish signal, and we have to be really very cautious because it may turn out that this is an inverted flag. So this is the flagpole, this is the flag itself, and this is usually how the price exits such kind of inverted flags. But once again, we still have enough let's say time to see what happens in the near future. Let's cross our fingers for Bitcoin. Of course, if you are constantly in front of the price chart, you fellas, you can keep an eye on this, let's say, sequence of descending local highs here and descending local lows. For example, if Bitcoin exits this, let's say, downtrend or wedge, that will be an additional bullish signal. At the moment, we still have this lower highs and lower lows. That's why it is really worth keeping an eye on this channel and keeping an eye on the price behavior at the lower line of this channel. So that's it for today, fellas. Thank you for watching this video. Please share your point of view on the price chart of Bitcoin as a comment below. Of course, I wish you a very wonderful day. Good luck in the financial markets, and I hope to see you in the next one. Thank you for watching.